What's up, everybody? Jonathan Rose, owner, Masters in Trading. Guys, I've been trading bonds since 2003. That's 16 years or 17 years now trading bond futures, interest rate futures. I was with a firm for 8 years. All we did was trade bond futures, and I ran the firm. People come to me specifically for interest rate futures. On Friday, we shared Edge Trade of the Week. Again, we love the short bob trade. See chart below. The chart below is using a proprietary tool that we built, that one of my students built, Pablo Lucina. Pablo now runs our futures area. Pablo used to be an employee at Facebook, started working with me at the end of 2017, now is a full-time trader. He's taken our bond approach and built a tool. It's a plugin that goes over Thinkorswim that allows you to follow the trade in a really simplistic way. So you can see the tool is in front of you. Going back to the beginning of the year. At the beginning of the year, if you would have held the green line until today, you would be up $9,900. If you were short the green line, you'd be down $9,000. The white line, it's the difference between 10s and 30s. Within the difference between 10s and 30s, there's 10 to 18 that you could trade, 18 to 30 that you could trade, right? 10 to 18, 18 to 30, or 10 to 30. Now the white line is 10 to 30. 10 to 18 is going to be that light blue line. 18 to 30, the way back end of the yield curve, the green line is 18 to 30. So the blue plus the green equals the white. Well, we shared this exact trade on Friday. We love the short bob trade, selling 2 ZB and buying 1 UB. At that time, you can see the spread was at $14,000. If you would have been short that spread from the beginning of the year, you would have been down $14,000. We weren't short. It's just a way to look at the value of the spread. If you sell it at $14,000 and right now you buy it back at $9,900, you would make $5,000 or the difference, whatever the difference is right there. So for us, the trade that we shared is get short that green line. And because there's so much BS out there about people teaching futures, I want to always show as much proof as I can. Pablo, 3 hours ago this morning, anyone short the bob, if the spread gains another $2,000, considering cover at present levels. Yotam just took $2,000 out of the market. And then a little more, okay, I'm convinced Bond Edge is amazing. Look at that bub go, just paper trading, but up $8,500 since Friday. This is Bond Edge. I did something fun so you could see the relationship of the butterflies over time, going back to 2015. What's a butterfly, guys? A butterfly, if you have 10s, 18s, and 30s, 18s is the belly of the butterfly, and 10s and 30s are the wings. So 30-year bond future against the 10-year and against the ultra, that makes up the ZB butterfly. Going back, and each year I did its own cycle, so you're analyzing just that year. 2016, bonds got very expensive relative to ZF 5-year, the red, and the 10-year green. You can see how it snapped back pretty quick. This is what we want to do. Wait on the edges. You could also see how much more volatile the bond contract is relative to the 10-year and relative to the 5-year. But right now, wow, that 30-year is really, really expensive relative to the other two, specifically to that 10-year. Wow. I'm starting to really like that knob play. Long 10-year short ZB. But I'd be looking at that for a little bit of a longer term hold. That has a ways to go.